We want to talk about overall market reaction, not specifically to Archegos, but all kinds of things which are hitting markets right now. We want to invite back into the stream Sylvia Jablonski, Defiance ETFs Chief Investment Officer and co-founder. It's always great to see you, Sylvia. And there's a lot to talk about here, but overall, wanted to get your impression of what we witnessed yesterday, which was the dramatic purchasing that drove us to the upside. And even today, even though we got a bit of a sell-off, it's not that dramatic. We are still essentially in record territory. What do you make of this?
Hi, Adam. Great to see you. And, it's actually something that we talked about the last time I was on with you. And, a few weeks ago even after January, let's say, there was so much talk in the market about the need to allocate to cyclicals and to value, and that the growth story was sort of over. And that was partially because of valuations being deemed too high in the 10-year. But, what we really saw and what I've sort of firmly believed is that a lot of those names pulled back enough that they all of a sudden became like the value trade and where investors wanted to put their money and to reallocate to. So, when you saw the top FANG names, for example, pull back, I think a lot of investors looked at that and said, hey, this is, these are way off of the all-time highs. And although there are some headwinds, we would still expect these companies that have strong balance sheets and usually perform on earnings and things like that to potentially rally. Taking some profits out of the cyclicals and values probably freed up some of that cash too. So, it just goes to show you that the bifurcated portfolio still works. You want to pick your spots in cyclicals in the service sector and the reopening trade, but pick your spots in the names that were sort of beaten down. And I think that's what we're seeing and what the market's telling us is going on.
So Sylvia, then going off of that, though, this rotation, at least that we have seen over the last couple of days with growth now back in favor, you're saying that you still see some opportunity there. Do you think tech is going to resume then its leadership position? Is that safe to say, or is that maybe going a bit too far?
I think it's tough. I think it's tough to say whether tech will lead the market for the next decade. If you asked me 10 years ago, where do I put my money? It was sort of all tech and growth, and that was a really smart place to be. And I think that tech will continue to perform. We're in the second year of a bull market. We saw more or less a 70% recovery, which was just unprecedented, so fast and so momentous. So I think that in the second year of a bull market, you see positive returns, but you also see lighter positive returns. So I do expect tech to perform. But that being said, I do still like some of the cyclicals, like Carnival's off of its all-time highs. The airlines are off of their all-time highs, but the casinos and the hotels, for example, are kind of up there now. They've picked up a lot of that reallocation trade, and unless I'm getting those names on the dip, I'm probably not looking there. So I think, though, what will lead the market into the next decade, let's say, is going to be completely different. It's going to be the fourth industrial revolution. It's going to be technology in the way of machine learning, Internet of Things, quantum computing, the different types of tech.
Sylvia, what you also think, though, for instance, the energy sector up more than 30% year to date, but I'm not talking oil. You're talking hydrogen and fuel cell technology. Tell me about the plays investors could get in on right now, especially with potentially $2 trillion in infrastructure spending, with a lot of it devoted to green energy.
Yeah, and I think this is a great story. So it's been around for a while. People have heard of the stocks like Plug and Fuel Cell and ITM. And, these are basically companies that store, produce, and use hydrogen in different ways. So the investment in hydrogen right now is about 150 billion. It's thought to go to 11 trillion by 2050. So there's just a massive amount of money going there globally. Saudi 700 million recently invested, over $1 billion with the EU. President Biden coming out talking about his infrastructure plan, and a huge part of it involves clean energy. So, I just think that we're running out of fossil fuels. 90% of our energy comes from fossil fuels. They're bad for the environment. Hydrogen is produced in a way where the emissions from it, if it's done with alternative energy sources, is water. There's plenty of it. It's the number one element in the universe. So, if we can find ways to harness, store, and produce it, then, our consumption of hydrogen will essentially make a lot of the stocks in that area soar. So looking at like a hydro ETF, again, Plug Power, Fuel Cell, ITM, I think that's the next decade of energy.
Sylvia, let me get your thoughts on the banks, because the banks have had a nice run recently, and we're set to get earnings from some of those big banks starting next week. Are they still attractively positioned right now, or how are you viewing that sector?
So I like banks against some banks. I think that what we just talked about with Archegos Capital is a little bit, alarming in terms of perhaps some of the banks that had big exposure there. But just in general, the story is that rates will eventually rise. They're paying out zero on savings. Obviously, home sales are at all-time highs. So they're getting some payment there on mortgages and interest with the 10-year going higher. So I do think that the margin favors banks right now. And I think that, it's a good place to allocate money. I think they're well capitalized. They certainly survived this sort of COVID crisis over the last year a lot better than we thought they did. So we didn't see a 2008. We saw resiliency there. So, I do think that with consumer spending, credit, all that kind of stuff, particularly home sales, it's going to be beneficial for banks in the coming years.
Always good to see you, Sylvia. Sylvia Jablonski, we should tell you, is Defiance ETF's Chief Investment Officer, as well as the co-founder. Looking forward to when you join us again in just a few weeks.